Let's see what's happening with AMC stocks. As we can observe, there was a short squeeze down to $12. I'll definitely show my portfolio. Here's how it looked. As you can see, I practically got rid of all positions related to AMC. We'll also take a look at volatility and what's happening here. Let's examine the volume of options trading, and of course I'll summarize. Yes, of course I summarize every week, but a significant event has occurred, so I'll show and summarize now because I closed many positions. I got rid of all my shares, closed all options, some with significant profits, some with significant losses. I'll put all this into a table. I'll also discuss what's next for AMC, whether a significant short squeeze awaits us. But let's start from the beginning. There was a short squeeze, which I anticipated rise to $10. I remind you that I absolutely do not believe in a short squeeze that should occur up to $100, up to $300. But in every single video I said that I expect a short squeeze down to $10. I'll insert excerpts from those videos into the possibility of the price moving up to $10. A $10 short squeeze is still a very significant increase of 230%, but I don't entertain the idea of the stock rising to $300 or $500 its lies. This is very important because again, since I said there wouldn't be a short squeeze, many might remember this and write in the comments, look, the short squeeze happened. No, friends, I talked about this short squeeze down to $10 that it would happen. And I even specifically bought options for this short squeeze at $10, as you can see. Again, look, in absolutely all my previous videos regarding AMC, you'll hear this exactly. I don't change my position, I stick to it. I remain a consistent investor with one clear opinion, which I adhere to. And again, based on volatility and options, will definitely summarize my experiment. In fact, I closed all my positions to open new ones later and see what happens. Now, let's see what's happening. Regarding volatility, the first thing to note is that volatility has increased significantly to around 400%. This is a lot, primarily due to this incredible short squeeze. I'll explain systematically, step by step, and then we'll discuss why such a large candlestick has formed. Now, let's look at the volatility smile. As you can see, the volatility smile is tilted towards growth. Yes, this rarely happens typically. Volatility is skewed towards a decrease, towards put options. But now, as we can see, volatility is increasing significantly towards call options, towards growth. The higher the volatility, the harder it is for stocks to rise. This is also related to market makers. I'll explain how this works later. Let's also look at historical implied volatility. At the moment, implied volatility is much higher than its historical values. This is a completely normal situation because the stock has grown significantly. Now let's look at the volume of options trading. As we can see, there is a very, very large volume concentrated. Some people were opening these options today and yesterday because in the review I did at the end of the previous week, you can see that these volumes were not there. They appeared quite recently. And as we see, AMC fell to $7. Therefore, absolutely all people, all investors who bought these call options above $7 will simply lose money. I'm sorry, friends, but you just lost money on this hype. If you had watched my videos, you definitely wouldn't have made such a mistake because naturally you should have sold here, as I did. Again, I was selling shares at $9.50. Let me explain why I sold at this price. We could see a lot of put options being bought, but it doesn't make sense to buy put options on such a large volume. Let me tell you how market makers operate briefly. As investors and traders accumulate call option, market makers sell these call option. Consequently, when a market maker sells call option, they need to hedge this sold position by buying stocks. So for every call option sold, they must buy stocks. They buy stocks according to delta, the so-called delta neutral hedging. Therefore, the higher the price rises, the more stocks they need to buy. As we can see, there is a significant, massive increase. But as soon as sales start, the market maker must sell back all the accumulated stocks, causing the stock price to plummet. That's why we see such a huge red candle. The same thing is happening with GameStop stock. Perhaps there are some news that we are not aware of yet, but the derivatives and options markets anticipate these news anyway. So why didn't I wait for an upward movement? Why did I only expect it to reach $10? Because the company issued a lot of additional shares, complicating the rise with this burden of additional shares. I also want to say that many bloggers and traders believe in a massive short squeeze. I'm telling you, it won't happen. It's just a lie. Yes, many people don't like it, but again, I repeat, if there were supposedly a lot of shares locked up by funds or other traders, meaning they couldn't sell or buy shares because there were too few available, or some other story about these mythical shares that couldn't be bought. In general, look, if that's the case, then why hasn't AMC stock skyrocketed immediately to $300, $500, or $1,000? Why, if we have a huge number of shares that supposedly cannot be bought because hedge funds are supposedly going bankrupt and all the other nonsense they're telling you, why has it stopped right now? It seems like we should have bankrupted all these hedge funds, but it didn't happen, and it won't happen because it's all nonsense and lies. Bloggers are telling you complete nonsense to make money off of you. I always tell you the truth, my friends. If you sold these shares now, great, well done. You can buy them back cheaper. But again, it's too late because I sold them at $9.60 now. let's look at all my trades. You can see them on the screen. I'm being completely transparent, showing you everything. As you can see, I had 1,600 shares. You can see the whole history, and I sold them for $9.60. Yes, I didn't sell them for $12 as I could have. At some points, it reached $13, but I only sold them for $9.60. Why? Because I was very cautious. I watched as trading halts occurred frequently. When I saw these massive sell-offs, I also monitored the options market, and I realized that yes, it was time to sell. I sold them when the market opened. Yes, the stock rose a bit to $10.50. That's not a big deal. Then, as we can see, my signal worked and the stock fell and continues to fall. So since I closed all my positions, let's calculate my profit. But before I tally up my earnings, let me remind you that I started my experiment in January. My goal was to outperform AMC stock with $10,000. That means my goal wasn't just to make money, but to outperform AMC stock. I used fairly complex strategies involving options and derivatives, so let's summarize now. This table is attached to the description, and anyone can freely access it to see what's happening. Everything is presented sequentially. In my previous videos, I've explained everything and there's nothing hidden. Last week, we can see that my strategy, represented by the blue line, significantly outperformed AMC stocks, represented by the red line. Yes, there will be a lot of numbers, which not everyone likes. But again, this is real trading and everything is transparent. I closed 8 options at a price of $100 each. It might seem like a lot, but actually the overall volatility increased. So this position closed with a small profit. There's also a commission of $9, so I received a net profit of $79. Additionally, I closed another 10 options with a strike price of $2, which closed at $5 each. Yes, I incurred a loss here, but this position was solely for hedging, resulting in a loss of $360. Unpleasant, but losses happen. The 5th option, 10 units, each at $89, closed with a net profit of $374 thanks to the accumulated profit. The next one, 5.5 units, I closed at $33 each, resulting in a profit of $1,200. Very good profit, I must say. Then, with 6.5 units, I closed at $175 each, resulting in a small profit of $200. Continuing, options with a strike price of $7 closed at $215 each, resulting in a profit of $260. Now, the most significant part, my call options, 10 units with a strike price of $10, which I bought. As we can see, this brought in the largest profit of $3,384. Call options certainly brought me a significant profit. I also closed 8 put options, 3 put options with a strike of 8. They closed at $470 each, also a very solid profit of $1,000. I also had put options that closed. I quickly bring profit here, as we see, sold at 4.5. Put options closed at a loss, also associated with volatility, so theoretically there shouldn't have been profit, but here we have a loss. So 20 put options brought me a loss of around $350. Unpleasant, but nothing serious. Also, the most important thing is a significant loss on the call options I opened. Again, everything was hedged, nothing serious. Yes, I formed a significant loss on sold call options. Again, $7,000, but the most important thing is I sold shares. The average was 4.39 cents, and I sold them for 9.63, so I made a profit of $8,384. Altogether, including all profits and losses from all options, all stocks, $8,000. This is called position management. The main surprise today, March 14th, 2024, I enter all the results into the table. In the end, my portfolio grew by 78%. Let's see how much AMC stock is growing at the moment. It's 6.61 cents. We put it in the table, and as we can see, yes, the stock is very strong. It has grown, but my portfolio still outperforms AMC from the starting point. As we can see, my portfolio grew by 78%, and AMC stock grew by 57%. And let's look at the result. As we can see, the 2 lines that pulsed from above flew, i.e., my portfolio's stronger line grew very sharply, but AMC stock also grew very significantly during this period again. The experiment isn't over. I just decided at the moment to close positions so that in the future, when AMC stock falls, and I guarantee you I will completely start forming my portfolio anew. And imagine I've already locked in all my profits. My blue dot will remain right here, while AMC stock will fall back, as we can see, then I'll just be unstoppable. You can call it position management. You can see this table again in the description, all completely free, accessible. You can also watch all my previous videos, how I opened, how I closed positions essentially. I'll start completely from scratch with a new position, but again with accumulated profit. Now let's take a look at AMC stocks. Again, I remind you of my philosophy that predicting stock movements is impossible. I focus on options on the volatility market. I deny that you can predict stock movements. I focus on competent position management. If you manage your positions competently, you'll make money, just like I do. Again, you need to listen less to bloggers who tell you about wonders. A truly analytical approach is needed here. I hope this was helpful for you. Also, a new experiment will start very soon, where I'll be forming a completely new portfolio in the same way, starting from scratch. I'll be showing which stocks I buy and sell. Take a look at this video where I talked about what my portfolio will be based on. Good luck.